Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Nate Tobik on the line, investor and founder of CompleteBankData.com. Nate, how you doing during this earnings season?
I'm doing well. Thanks for having me on, Joel. Appreciate it.
We love your input. Just overall, your intake or your take on the banking sector earnings.
Yeah, so banks seem to be doing well. Earnings are they're going up. We see some top line growth across a lot of names, and a lot of banks are finally have worked off some of the trouble they had years ago, and it seems like in some cases we're completely beyond that. But at the same time, something we pulled up recently, just looking over the last 4 or 5 years, looked at the non-performing asset trend and credit quality. And so for most quarters, there'd be only one or two banks that had credit quality worsening. And suddenly we saw at the end of the fourth quarter, there was 117 banks that had a reversal of this trend. So some of the reversals are very small, and some are significant. But I think just the magnitude of this trend is something to keep in the back of investors' minds. And the trend seems to be keeping up in the first quarter of 2015. So the data isn't fully in yet, so we don't know for sure. Don't have the hard numbers on that, but just anecdotally from what we've seen, it seems to be continuing. So, we had a lot of years after the financial crisis where credit quality was improving and non-performing assets were going down. And then suddenly we see them going back up. And, so I don't know what this says. Maybe there's a reason for this. Maybe these are some cracks in the economy. But it's something to keep an eye on.
Okay, let's talk about some trends in credit quality here. Speaking about valuations, what are you seeing out there? Anything concerning?
Yeah, it seems like investors are so that there's so much demand for high quality banks or banks that have high returns on equity that investors are overpaying in some cases. So the average return on equity across all traded banks is about between 7 and 8% right now. And those banks are going for a little over 1 times tangible book. If you go up to, say, a bank with a 13% return on equity or a 15% return on equity, people are paying 2 to 3 times tangible book for these banks. And that's a significant gap. So I would say on the low end, the banks are probably a little too cheap, and there's some room to move up. But I would say don't pay up for earnings, and don't pay up for some of these growth stories that might or might not come true.
Okay, I'm moving on here. I know you like to keep an eye on some of these smaller community banks, and you better help me out with the symbols here, Nate. Any smaller community banks on your radar?
Yeah, so there's one that I have found recently that I'm very intrigued by. It's Polonia Bancorp, and it's PBCP. And
Could you
this
give me
is
that symbol again, please?
yeah, it's PBCP.
Okay.
And it's about a 40 some million-dollar market cap bank located in Pennsylvania. So what's really interesting about this bank is they converted from being mutually owned a few years ago, and there are 5 bank activist hedge funds involved, and they own 38% of the outstanding shares. So
Whoa.
there's some weight behind this bank, and this is a very underperforming bank. They've been slightly profitable. They have high expenses, and so our take is when you see a number of activists involved in a stock like that, something's going to happen, and it might not be today or this week or this month, but the clock is ticking, and it's just a matter of time.
How do you get into this thing, though? I mean, I see one day it traded 24,000 shares, but I mean, this volume is low. I mean, is there, and I
So
doubt there's options on this. How do you get into this thing?
the trick on these banks is what usually happens in terms of liquidity is there's none until there's some. So what'll happen is there might be a few days where there's very small volume. And then what happens is a big seller will come along and they'll dump all their shares at once over maybe 2 days. And so when that liquidity comes in, you need to be ready to buy and buy in size. And often the advantage is because these are more illiquid stocks, when someone does want to sell, they're willing to take a bit of a haircut. So, it's opportunistic for buyers to be able to buy in when there's that liquidity.
Okay. Any other community banks worth mentioning?
Yeah, another bank I like is Eastern Virginia Bank Shares, and that's EVBS. And it's another smaller bank, although they have so Polonia has just a couple $100 million in assets, and Eastern Virginia Bank Shares has over $1 billion in assets. So this Eastern Virginia is a couple times larger than Polonia. And what's interesting about them is I'd say they're very typical of a community bank with some issues to work off. So they have some higher expenses. They have just a number of growth issues, and they recently acquired another local bank, and all of their issues are very fixable. So what I'm looking for is I think we're going to see earnings really grow, and I think this bank is going to do well. Their management's aware of the issues, and I think these things could be worked off. And this is worth at least tangible book, if not 1 to 1.5 times tangible book once these issues are resolved.
And what's tangible book value on it?
I don't know.
Okay. All
I
right.
don't know offhand
Say.
yet. I have to.
Okay. We talk about the Puerto Rican banks and some of the problems going over there, the restructuring that's going on. Any comment on the Puerto Rican banks?
Yeah, I think so. For an investor who has a little bit bigger risk appetite, I'd say some of the Puerto Rican banks might be worth a look. I've spent some time looking at all of them, and they all have credit quality issues, and it's just a question of what the magnitude is and who the creditors are, and or who the borrowers are. So OFG and Popular BPOP are the two larger banks there that are traded. Those they have about between 5 and 8% of their loans are non-performing, and I'd say OFG, what's interesting about them is they have an extremely high net interest margin because a lot of their lending is to individuals and they do some auto lending. Whereas Popular, they have a lower net interest margin. So if OFG is able to keep their credit quality in check, they just took a big write down. So if that doesn't continue, I think they have a better chance of earning off their problems. Um, but the question is what's going to happen with the Puerto Rican government? So these banks all have a lot of lending to the local governments, water utilities, electric utilities, and if these local municipalities can't pay and they start to default on their loans, then the banks are going to take a hit. And so, the worry isn't as much the individuals. It's not the mortgage. It's not a housing bubble. It's the ties to the local governments, and so I don't know how that's going to be resolved, and that's really the big question. So what's happened with these stocks though is they're down significantly, and everyone's expecting bad news. And I think if we start to see even a few pieces of good news coming out of them, I think that there could be some sizable gains pretty quickly.
Just comment on some of the big banks. I know you follow them as well. Bank America, heavily traded stock, nice little bump up here. Just give us your outlook on Bank America.
Yeah, Bank of America, I think, it's both Bank of America, Wells Fargo, it's kind of that business as usual. As the US goes, they go. And so earnings both came out for both of them. Investors seemed pleased where things are going. What's interesting, I just read a report on Bank of America that said that they had the highest satisfaction rating in states where they don't have branches. So you know, take what you will from that. And but the thing is, these banks they have a large presence and they're everywhere. And in some cases, you can't help but do business with them. So they've been doing well at the high end, the biggest banks. These are still relatively undervalued. And I think an investor who puts some money in the larger banks and buys it and holds it and kind of forgets that they own them is probably going to do pretty well over time.
Okay, just to comment on a few others here. Goldman Sachs had some good earnings, had a nice run up, pulling back a little bit. Any take on Goldman Sachs? Looks like we're finding some nice support here on 195.
Yeah, Goldman Sachs, they had some real nice earnings. And the thing with a lot of these, so Goldman it looked like their investment banking really drove some of their earnings, and then obviously their trading. And with a bank like them, really their advantage is if the market's good or if the market's bad, they're still going to make money because they kind of have that pipeline. They could look into the future a little bit in terms of trading, and they amazingly always come out ahead. And so they have that kind of ballast to their earnings where the trading does well. There's going to be deals. In good times, people want to make deals because they're excited and there's a lot of euphoria. In bad times, people want to make deals because there's a lot of distressed assets that someone with money wants to buy. So a bank like Goldman Sachs, as long as they don't make any large errors, they're going to do relatively well.
Okay, we've been on the line with Nate Tobik. He's an investor and founder of CompleteBankData.com, giving us some small banks to look at and also his take on the big banks. Nate, great information as always. Have a great day. We'll talk to you again soon.
Thanks, Nate.
Thank you for having me on.